Today was to be D-Day for Nigerians and those living in the country to turn in their old 200, 500, and 1,000 naira notes as part of the Central Bank of Nigeria's currency redesign announced in October 2022. The deadline has now been extended by 10 days, and February the 10th is now the day that the old notes in those denominations will cease to be legal tender in Africa's largest economy. However, the controversy around the redesign and the exchange timeline have continued as Nigerians across the country have complained about their inability to access the new notes. The CBN's Governor, Godwin Emefiele, said that President Buhari gave approval for the 10-day extension. While announcing the redesign in October, Emefiele noted that an estimated 3.2 trillion naira was in circulation as of September 2022, with some 2.73 trillion naira outside of bank vaults. Aside from the 10-day extension, there will also be a 7-day grace period from February the 10th to the 17th in compliance with Sections 20 and 22 of the CBN Act, allowing Nigerians to deposit their old notes at the CBN after the February deadline, when the old currency would have lost its legal tender status. The chief economist for Streetnomics, Obele, joins me now to look into this, the extension, and the issues that continue to arise from this new direction. Gospel, welcome to Business Edge. It's a pleasure to see you once again.
Thank you for having me, Tolu. Really great to speak with you again.
So before this extension was announced, the CBN governor had made it plainly clear that it was a hard line for January 31st, and that was it, and there was no going back. But apparently that hard line did not stand. So over the weekend, on Sunday, he announced a 10-day extension approved by the president. When we look at what is going on and some of the issues that Nigerians have run into, will this 10-day extension really make any difference to the ability of Nigerians to get their hands on the new currency and exchange their old currency?
Well, for the central bank, yes, in retrieving old notes. I mean, since the policy kickstarted, the central bank has done at least, I think, about 1.6 trillion naira in notes that has been returned back into the coffers of the central bank, knowing fully well that the central bank had almost 80% of money that was supposed to be in their coffers, in circulation right there. So it's been able to retrieve that huge amount, and the expectation is that in the next 10 days, the central bank will be able to do more around retrieving. However, we can't say certainly if it will be a plus for Nigerians. Let's not forget that the central bank is still struggling with demand-supply dynamics for the new notes. And that's not just a central bank issue. That's also in collaboration with commercial banks and compliance. In context to compliance, commercial banks complying and enabling the process of that onboarding of the new notes. And that has to happen at a significant level, or at a minimum barriers level, where Nigerians can get to, get the new notes from the ATMs and all that. So you need more of the new notes right now in circulation as people take the old notes back into the coffers of the banks. So getting the supply-demand economics properly done and the execution properly done, as well as the internal controls required, to scale an effective onboarding, is really, really critical right now to the central bank and commercial banks than just retrieving the old notes.
So it's interesting because a lot of this was premised on the cash in circulation. And as you said, the CBN saying about 80% of what was printed was outside of bank vaults, not just for the CBN, but even commercial money deposit banks. But when you look at the conversation around cash in circulation and you look at what it is for Nigeria, you have people like Taiwo Oyedele, who works with PwC, saying that in turn, Nigeria actually has one of the lowest amounts of currencies in circulation relative to GDP per capita, around 15,200, which is around $34. And if we convert that, you have the US having about $6,700 per capita per person. UK is about 1,200 pounds. Eurozone is about 3,600 euros per person per capita, around that equation. Then you now have to ask yourself, is really cash in circulation for an economy that continues to be a cash-dominated one, with so many millions of people remaining unbanked, not being brought into the financial system, such a really big issue as we seem to make it?
Yes, I will respond to that in two different facets. Right now, the Nigerian economy is underperforming on its potential. So it's very important for us to put into context that. And countries and the likes of the United States and UK that you mentioned, they have, to an extent, built their monetary system or their financial system so well, such that the interactions between money supply and monies available in the vault, are properly done in terms of that exchange. And the markets are also well developed, to take on the economics of that exchange as well. But for the Nigerian context, in fact, so the reason why it's a big challenge is that when you look at what's in circulation in context to what the central bank should have or had, more recently around 3.23 trillion naira, that's a huge amount. 80% is a huge amount, and it poses a lot of security risk. Now, one of the reasons why it's a world potential is that the Nigerian economy has also undervalued itself and has not sought to grow its market extensively. Now, in terms of undervaluing itself, you have a close to 60% informal economy. All right. So when you put all those into context, you realize that even the Nigerian GDP is undervalued as well. The Nigerian budget, our total budget size to 1/5 of. That's still very, very low in terms of the Nigerian total budget size. It's not still up to 1/5 of the global brand value of Pampers. It's not still up to that. So we need to still do more around expanding our markets and unlocking our markets because the potential exists. If 60% of your market is informal, is an informal space, by the time you begin to build a pipeline through which you can gain those monies back into the formal system, not necessarily by making informal formal, but just build a pipeline such that informal can turn monies back into the system formally, then you realize that we can probably have a new valuation of what the central bank or what money circulation should look like. And then we can have this conversation again, in comparison to the US and the UK. But the Nigerian monetary system is still largely underdeveloped on many cases. We still have a lot of underbanked and underserved, in the financial space. And also to note, quite importantly, in context of what you said, that it is true. You can't run an economy on 100% cashless. Cash must still. There are many restaurants in the UK who only collect cash, but don't forget they also have proper reporting structures to ensure that those taxes and those monies they collect in cash, goes back to the system in one way or the other. So it's about really, really building those structures and ensuring that our markets are developing resiliently and that our figures are a true valuation of what the weight of economic activities that are being engaged in the Nigerian economy.
Okay, so let's stay with this circulation number. So while announcing the extension, the Central Bank of Nigeria Governor Godwin Emefiele revealed that about 75% of that 2.7 trillion outside the banking system had been recovered. In December, Aisha Ahmed, Deputy Governor of the CBN, actually told lawmakers that 500 million new Naira notes were to be printed. That's not the value, but actually pieces. 500 new pieces of the new redesigned Nairas. Now, we don't know what the quantity is for the different denominations. By just doing the math, there seems to have been an issue from the very beginning that we were going to run into a scarcity issue, which is what my next question leads to. Is this a deliberate scarcity in your view? Because when you do that math, 75% of that 2.7 is just over about 2 trillion Naira worth that has returned into the banks. And if the CBN says it's recovered this, and these are old notes of the 200, 500, and 1,000, why does there seem to be so many old notes still in circulation that people are saying they're getting from the banks? So let's start with the scarcity issue. Is this a seemingly deliberate scarcity issue, or just because it was not a one-for-one sort of printing of these new notes that were coming in?
Thank you so much, Tolu. When we started this conversation, a couple of interviews back, one of the major things I said was that the CBN is seeking to control supply with this new policy, and very clearly the central bank is seeking to control supply. And we're seeing it right now, in terms of how the new notes have been administered and how they find their ways or pathways into the economy, the mainstream economy. So the central bank is trying to dictate how much should be in circulation. And because, give or take, by the time the deadline is passed, your old notes become completely illegal tenders, right? It will now be a function of how much of the new notes do you have in circulation, to facilitate exchange. So on those grounds, strategically speaking, the central bank, how much of the new notes are available is a function of how much is being made available by the central bank as well, and also through the covers of commercial banks, and let's not forget, people are already spraying these new notes in parties, so in one way or the other, I think it's a deliberate act to manage the supply side of the new notes. However, the pathways or the ways through which they're being done right now is such that it's fueling a new wave of scarcity. which again brings us back to the inflation question, which again bring us back to a lot of things around how will Nigerians respond. By the time Nigerians begin to lay their hands on new notes, they may seek to stack new notes more than engage with the banks in terms of getting these new notes back again to the banks, in terms of deposits and the like. So I know definitely for sure that the central bank is trying to manage supply within the context of all these changes. Let's not forget also that the elections are around the corner. So there are also political and security risk associated with this exchange. As a result, thoughts, the reasons why the central bank wants to ensure that the deadline do not pass or do not get close to the 25th of February. So there are many other things on the table that the central bank is looking at. But I can tell for sure that there is a deliberate act to sort of control and manage the pace of supply of the new notes.
So we'll get to the vote buying, because vote buying is not just in cash. It can also be in kind. And with so many people living in multidimensional poverty, even a loaf of bread could be vote buying. But before we get to that, I'm so happy you mentioned that video. I wish we had it ready to play now. But there was a video trending on Nigerian social media of a young couple that had recently just gotten married. And if you know Nigerians, we tend to spray. Very celebratory events, we will spray. And on the floor were massive amounts of the new notes. And so many Nigerians are asking, I can't go to the ATM. I went to 3 ATMs yesterday. None of them were working. None of them had Naira, whether old or new, to give. I attempted to use POS. 2 of them did not work. And so this is a reoccurring theme. So many are asking the CBN, you want us to sacrifice to help you make this policy, but we see instances where people are spraying these new notes. People are talking about bank managers or bank individuals who are charging a premium to be able to give people new notes instead of having to go through the ATMs as it should be. So when you look at that as a context, you can understand the frustration and the anger that Nigerians have. How do you think the CBN has failed to address that?
Yes, I'm not surprised in any way, because we've always had that compliance problem in terms of, there are cracks within the monetary system itself, where policies and controls are not in place to check, what people are doing. For those new notes in bundles, to be out there like that in such an occasion, it shows to a very large extent the kind of people that we are. There are no cultural change in terms of how these new notes will be used. The new notes are still being abused in one way or the other. People actually got these notes from a bank, and the same bank will tell you they don't have enough to dispense through their ATM. So it's a very interesting problem we are faced with. And I think it's more cultural than strategic. So the central bank has to do a lot of internal controls and ensuring that banks are complying, and also probably soften its pedal a bit or its control a bit, in pushing out supply of these new, because we need the new notes to be in circulation at a minimum level, to be able to manage inflationary narratives, to be able to manage this whole scarcity issue and every other social vices that may sprout, from this particular execution, from the execution of this policy. So I think the central bank has to do more around internal controls, and the central bank needs to step up on new levels of controls. And clearly, since the pandemic, the time for that has come to stay, and we just need to do more around that. Otherwise, we'll just keep seeing different stakeholders abuse these new notes, and it's just going to be frustrating and unhealthy for the monetary system at large.
So interestingly about the control aspects, we've heard from Maxwell Okafor, who's a branch controller for the CBN in Port Harcourt, and he says it's getting to the point where the CBN will have to go into the bank's vaults, individual commercial banks, to see if they're hoarding or if there's any unhealthy conduct, because the banks themselves are making this cumbersome. And it feels like Shati Debe, let me say that in Yoruba. Have we gotten to that level where the CBN will need to go into individual banking companies and find out if they're hoarding the money? The CBN can do it because they can lose their licenses, they can be sanctioned. But Gospel, do you think it has to get to that?
If it has to get to that, then it should be done. It should be done because, to a very large extent, because of the kind of people we are, we do not have, any nation that is not built on values will not value processes, people, and inventions and policies and innovation and all the likes. I do not think this policy is a bad policy, although the method of its application, the approach, the timing is really questionable and worrisome. However, we still need to find the middle ground around a smooth execution. So, and clearly that process is being abused by critical stakeholders for particular gains or selfish interests, as the case may be. So if the central bank needs to take an extra step to engage in some mystery shopping exercise or ensure stakeholders are already ensure individuals are in the commercial banks, to ensure to make sure these policies are being adhered to, then the central bank should do that. Because otherwise, the central bank will be churning a lot of effort in making this work. However, the leakage would be on across the mainstream of the commercial bank. And let's not forget, a team is as strong as its weakest point. Yeah.
And then with all those leakages, ordinary Nigerians will be the ones suffering as they are. So let's go to that. In terms of this scarcity right now, even though some people are able to see it for parties, we've seen a policy like this in India. India is a comparison that many people have made since the CBN announced the redesign. And that was almost a near disaster for the Indian economy. It's not necessarily near disaster for us, but in terms of the impact overall for the economy, particularly for this scarcity at this moment, if you go to local markets, you have market traders telling you they're not taking old notes anymore, but not everyone has POS. Some are borrowing bank accounts from their colleagues for people to pay into, but I don't have the new Naira to be able to give you. So we're running into circles in all of this. What's the impact of the economy, particularly with the scarcity aspect of this?
Yes, I mean, there are a new level of fragmentations that have been introduced. As a result, the narrative around deglobalization, and I do not necessarily think we're in an era of deglobalization. I think we're still in globalization. However, we failed to pay attention to those fragmentations that have always existed. Why don't you have functioning POS in the markets? That's one major question we need to ask ourselves. Why are POS services not embraced or accepted by market women? That's another financial inclusion narrative and challenge we need to deal with. The challenge of onboarding and acceptance, readiness, and engagement. So these are critical questions that actually impact on the cashless economy bit of this policy. All right, I mentioned in past interviews as well that I do not think this policy will help us achieve a cashless policy, because the conversations around cashless policies are built around social infrastructure, people acceptance, onboarding, and all that. So we have these fragmentations currently existing, and it's going to create a new wave of gaps and issues arising within the financial system, which may further increase the underbanked or underserved. So I think to a very large extent, the central bank really has to do more on the part of this whole value chain that she can control, which is ensuring that the new notes actually get to the hands of the average Nigerian at the minimum of barest level they need to facilitate daily transactions. Because at the end of the value chain, cash would always exchange hands. Cash still exchange hands. So, and secondly, on the path of churning out this policy is to ensure that financial inclusion, in collaboration with fintechs, there are a lot of financial technology startups right now. They're trying to push POS into the hands of market women in Nigeria, but they cannot go so far because they don't have the institutional power or the infrastructural capabilities to drive that. The central bank does have that. The commercial bank does have that. However, they need to collaborate more. They need to see fintech startups as part of the ecosystem in reaching the financial inclusion drive. The recent policies by the central bank has shown that the apex and apex institutions, to a large extent, are not really interested in partnering with fintechs, although they seem like they are, but they need to do more openly, and they need to enable that process openly. Until we can do that, because the fintech have developed a model to connect to the market women. The market women do not trust the system. That's why they don't have POSs, and they're not interested as well. So connect to the fintech who have a more ground level intelligence in terms of engagement, and then scale financial inclusion activities in that regard. Once we can begin to do that, then we also defeat the context of scarcity of the new Naira notes. But however, in the short term, I think those notes need to get to the average Nigerian at a minimum viable level, to manage for these excesses that we find ourselves in.
Okay, so the CBN governor also pointed out what he described as an evident drop in the rate of inflation, more stability of the foreign exchange rates, and he even said noticeable impact on security, especially in banditry and kidnapping figures because of the redesign. So is it truly having an impact, such as the heavy weights that the CBN governor is saying that it's having? And when we look at it, particularly with the exchange rates and the Naira stability, this redesign and this process that we're going through, as difficult as it may be, in the long run, is it really, at the end of the day, a positive one for Nigerians?
To be very honest, it's a good policy. It's a good policy because it will sort of put a lot of things in check, especially in the short term. Especially in the short term. And part of I don't have the very official figures as regards the security challenge.
Yes.
But one thing we've seen is that we've seen a lot of rising question and tension around the central bank since this policy was introduced. So clearly, the policy pinches somewhere, for stakeholders in one way or the other. So and the fact that the central bank has been to recall about 1.6 trillion back to into the coffers of the banking system, that's a huge plus as well. So in the short term, the policy would actually drive a lot. We've seen the pressure across board for politicians. A lot of things have been happening recently, but the context of scaling this in the mid to long, because kidnappers can always request for new notes as well.
And we've seen them do that.
The context for scaling this is actually dealing with the root causal issues. The root causal issues around counterfeit notes, the root causal issues around insecurity in the nation, root causal issues around financial inclusion, enabling the underbanked, the underserved. So those things have to be dealt with. They do not respect the fact that you have new notes in town, all right? They would always adjust to the fact that you now have new notes. So pending to when that adjustment cycle is complete, the central bank has to, well, not really the central bank, in partnership with the fiscal authorities, have to really execute on a landslide in dealing with these key root causal issues. Until they're being done, I do not think, in the deepest sense of things, that this redesign comprehensively will favor in the long term.
All right, so let's look at one of the big issues, and we've heard the politicians, particularly members of the National Assembly, say this is not it, and many people are saying it's because of the election. So one of the reasons that the redesign seems to have come up revolves around trying to curb vote buying in Nigeria's upcoming elections, less than 30 days now. But it seems to forget that vote buying doesn't just entail cash. It could also be kind. The example I gave earlier, we've known politicians in the country to give gari, to give rice, to give even bread, even, of course, call cards or credits for calling companies, telcos here, as forms of inducement. And there are some who are even curious that if politicians are able to get their hands on the new notes, it makes them more viable, more attractive to a voter. So is this really going to be effective in curbing vote buying in the upcoming elections?
To be very honest, I think it was one of the major reasons why the central bank had to do this at a crunch time. I think it's going to impact, in fact, to a significant level. However, the stakeholders in the political space would want to push heavily their contacts in the commercial. So the leakage is actually in the commercial banks, even in the central banks as well. So, all right, just the way you want to ask yourself, how did we find bundles of the new notes being sprayed at a party? Those are many ways through which those same bundles will find their hands to the point, find their ways, to election on election day to the hands of Nigerians or politicians, as the case may be. So I think the central bank has to, number one, block those leakages. Number two, the focus will now be using data and intelligence, to be steps ahead. If you cannot share money, it means that monies will probably exchange hands on e-transaction platforms, as the case may be. Let's not forget, before you can order for 100 bags of gari, you must have exchanged the money somewhere, on the internet banking or e-transactions platform, or probably order for those 100 bags with a motive to pay back later. So the central bank probably has to look out for activities, intelligence-based activities across e-transactions, pre-elections, on elections day, and even 6 months down the election period, to find out how transactions are moving across e-transaction space, and all that. So yes, they may want to resort to non-monetary means of incentives, but those things are still largely hinged on a monetary mechanism process, through which the central bank has the institutional capabilities to put a track on if it's really, really intentional about managing the excesses that come along with this narrative. But to say that the whole political landscape will not catch up with the new notes month later on would be a big lie. So we need to deal with the fundamental issues at the same time.
All right, my last question goes to really who we are as Nigerians gospel, and I'm going to need an answer in 1 minute. So the House of Representatives says that they actually want a 6-month extension rather than 10 days. And let's be honest, we're a country that pushes deadlines. NIN, BVN, even now PVC, and now the extension to turn in these old notes. We don't seem to be a country that can do well with timelines, deadlines, and extensions. Do you really think that if aside from the political conversations and context around this, is this a policy that should have had 6 months or a time frame? Because people point to even using the serial numbers on bills to sort of phase out certain currency and denomination in a phased approach. You also talk about the new currency coming in for the United Kingdom because of King Charles now, and that's going to be done over several years. In 1 minute, just tell me, could we have handled this better? Should we have done a more phased approach if we had to take elections out of this?
Yes, it could have been handled way better. It could have been handled way better. In fact, in the United Kingdom, the two currencies are expected to co-circulate. There is no information anywhere that says you must retrieve one for the other. So I think that we could have gone through that means, although there were risk of too much money in circulation. Then again, because your economy has been undervalued, in context to what is in circulation. If you value properly, you realize that we don't have so much money in circulation in the real sense. So it could have been handled differently. We could have paced it a bit more. Even the redesign of the currency, we could have probably come up with better designs, better quality currencies. There's just a lot of distrust elements around the policy in itself. It's a good policy, but again, the process of execution and its approach has been very, very faulty. Outside the political bit, I think we could have done this even over a 2-year period or a 1-year period. But then again, the insecurity issue outside the election was a major mainstay. The counterfeit bit and the kidnapping and all the likes, impacting on money in circulation.
All right, Gospel, apologies for rushing you there, but we have to wrap things up. And it's interesting because I do believe there's going to be more conversations. House of Representatives is on this. The CBN governor got approval from the president. We didn't even touch on that. Many people are wondering why he needs approval when he is an autonomous source and has a board of governors. And so there's still many conversations to be had, and I know we'll be talking to you sometime soon.
It's appointed by the president.
So even conversations there
the same thing.
About the independence.
Autonomous is relative.
Yes.
Very relative. Yeah.
All right, let's not go down that trail right now, Gospel. Thank you so much. I'll see you again soon.
For having me. I appreciate the time.
All right.
Yeah.
And this extension is for 10 days, taking us all the way to February the 10th. Before that old 200, 500, or 1,000 Naira notes in your pocket becomes probably not worth the paper it's printed on. But there's still definitely going to be a lot of updates and developments on the way to February the 10th, and we'll be following them very closely. We'll take a quick time out now. When we come back, we have international business headlines for you. Into treasuries and other fixed income investments ahead of the Federal Reserve's first meeting of 2023, even as stocks start the year with a hopeful rally. Yields on the benchmark U.S. 10-year Treasury notes, which move inversely to prices, have fallen by around 83 basis points from their October high of 4.34%. Investors sent $4.89 billion into U.S. bond funds last week, the third straight week of net inflows. The rally comes after Treasuries notched the worst year in their history following the Fed's most aggressive monetary policy tightening since the 1980s. Worries that the Fed's rate increases will send the U.S. economy into a recession have been a key driver of demand for Treasuries, often seen as a safe haven during economically uncertain times. Britain is the only group of 7 nations to have suffered a cut to its 2023 economic growth outlook, an International Monetary Fund forecast published on Tuesday, adding to pressure on Finance Minister Jeremy Hunt to come up with a growth plan. Britain's flagging economy now looks set to shrink by 0.6% this year, a sharp downgrade from previously expected growth of 0.3% in the IMF's last forecast in October. All other G7 economies are predicted to grow this year, mostly at a stronger pace than the IMF forecast 3 months ago. The IMF said Britain would struggle with a combination of factors, including higher taxes announced by Hunt late last year, as he tried to restore the confidence of investors after September's mini-budget from former Prime Minister Liz Truss. France avoided a contraction at the end of 2022, allaying concerns that the Eurozone's number 2 economy will slide into a recession as soaring energy costs hobble households and businesses. INSEE Statistics Agency said that gross domestic product rose 0.1% in the fourth quarter, supported by investment and net trade. Economists had estimated GDP to remain unchanged. The numbers offer some relief for Europe after data released on Monday revealed an unexpected downturn in Germany in the final 3 months of 2022. The picture painted by France is unlikely to knock the European Central Bank off its path of interest rate increases. UBS, Switzerland's biggest bank, is forecasting an uncertain year ahead due to the war in Ukraine and sagging clients' confidence on Tuesday, despite trumping expectations for 2022 with a $7.6 billion net profit. The world's largest wealth manager kicked off a round of business results for Europe's banks after Wall Street embarked on job cuts in the face of fading economic growth. Shares in UBS slipped close to 4% after it cautioned that inflation and the war in Ukraine were clouding the future, dampening the mood among its wealthy clients. It said that lower asset prices and weaker confidence could affect its business, although it would also gain from higher interest rates. Asian shares edged down and bonds nursed small losses on Tuesday as investors brace for an eventful week that will include central bank meetings, a slew of earnings reports, and key U.S. economic data. Investors broadly expect the U.S. Federal Reserve to raise interest rates by 25 basis points on Wednesday. Interest rates announcements are due on Thursday from both the Bank of England and the European Central Bank, and both are expected to hike rates by 50 basis points. In Asia, the MSCI's broadest index of Asia-Pacific shares outside Japan was 1.1% lower. The index is up 9.9% so far this month and is on course for its best January performance since 2012. European markets were set for a lower open, with Pan-region Euro Stoxx 50 futures down 0.848%, German DAX futures falling 0.47%, and FTSE futures dropping 0.29%. U.S. stock futures, as well as the S&P 500 E-minis, were down 0.06%. Oil headed for a monthly loss as traders waited for more clues on the outlook for Chinese energy demand, a policy decision from the U.S. Federal Reserve, and the latest guidance from cautious OPEC Plus producers. WTI eased towards $77 a barrel after retreating by more than 2% in the week's opening session. China's reopening after its harsh COVID-0 policy was abandoned has boosted optimism that consumption will pick up as mobility improves. Global benchmark Brent's prompt spread, the gap between its two nearest contracts, has widened further in backwardation ahead of March's expiration later today. The gap was 60 cents a barrel, up from 3 cents at the start of last week. Money managers increased the net long Brent positions to the largest in nearly 11 months. And those are the international business headlines for you, keeping our eyes on what's happening outside of the continent economic-wise. We'll take a quick break. When we come back, we'll be wrapping things up. Across Nigeria, people are wondering when they're going to get their hands on the new Naira notes. And lock queues have been seen in Nigeria's federal capital as citizens groan over a lack of access to cash as banks implement the nation's cash swap policy. Now, many residents that News Central spoke to say they've been left frustrated as even commercial banks do not have cash to give to their citizens. They've also accused the government of being insensitive. Amadi Uyi has the details.
The queues have become a common sight in the nation's capital, Abuja. Heated arguments are usually witnessed as citizens express their displeasure and visible frustration.
I've been here since around 4 a.m. I haven't slept here, 4 a.m. Instead of us to be sleeping, we'll be coming to ATM around 4 o'clock to queue. You will stay, they will tell you 8 o'clock. When you queue to 8 o'clock, they will put money. Before you know, the line will be much.
I've been here since morning, trying to withdraw just 10,000 naira. Since morning. When it gets to my turn, they say I should go and get tally. What is tally? They are giving numbers before you come and queue. This suffering is too much, oh.
Look at the queue, it's terrible. I've been here since morning.
So like approximately how many hours then?
Getting to 5 hours now. I'll be standing, looking for 20,000 naira, my own personal money.
Some of them say despite the queues, they cannot even access cash.
Remember, you say you printed money. You printed how many 500 have you been able to print? How many 1,000 have you been able to print? I'm not talking about 200. How many? The same money. You will now buy money. You buy 1,000 naira at the rate of 500 naira. So who is eating who? You buy Nigerian money with the same Nigerian money. How does it sound?
It's a very terrible policy. I'm not sure they were actually ready for what they are trying to implement. The government, I'm not sure they are ready to do what they are trying to do because it's not working. The policy is not just working. It's not working at all.
It has been very difficult to, from Apo resettlement, I'm coming to area 8 just to get cash, and the cash that they're giving me is 20,000 per transaction. From morning till night, there will be plenty queue from bank to bank, bank to bank. When it eventually reaches your turn, the money is over. You go to another place, you start queue the same way, you still reach your turn, the money is over. To the extent that they are even bribing security officers for them to enter and get money. So if you don't have that money, you cannot bribe security officers to allow you to withdraw money.
The extension by Nigeria's Apex Bank was supposed to reduce the sufferings of citizens. But from the line behind me, you can see that the queues have not reduced. Some of the residents we spoke to say they still find it hard to access cash for their daily transactions. They want urgent solutions to end this current hardship.
See people, this is only Eco Bank. If you went there now, this is Net Bank. See, this one is Fidelity Bank. You see, everybody is tired. Who caused this? Nobody knows. I've been asking who caused this. If you want to ask me, I don't know the next person that I will ask. This is my bank. Since last week, they don't pay me. They don't give me any money. Any bank, there's any bank that that will be able to give me money. I now ran out to my own bank, Union Bank, to see if I can be able to withdraw money. But I have not since morning, since after 2 o'clock.
Even point-of-sale operators say their business is on the verge of collapse, while other citizens want solutions to the crisis.
Where you are collecting 200, it's 4 times that they will pay. You have to collect like 5 times, and as you collect 4 times, they are charging you 35 naira. You have to pay like if you want to withdraw that 20,000 now, you calculate 35 naira per 5 times. So if they charge us for all those things, customer come, you charge them, they will be shouting.
You go to counter, they say they will not pay you money, that you should go to ATM. So government should please tell the bankers to be paying us from the counters so that we can get our money.
Amadine Uyi, reporting for News Central.
And this is just what's happening in Nigeria's federal capital, Abuja. If you're here in Lagos, there are many, many people across Lagos, which is, of course, the commercial capital of Nigeria, that are also facing the same thing. If you're out there, you want to let us know what you're going through, trying to get your hands on money at this point, whether it's the old notes or the new notes, you can, of course, reach out to us on social media. We are at News Central TV. 10 days extension. That's all the CBN is giving Nigerians to return their old money and get the new money. But the problem now is many people are not able to get any money at all. It's a story we'll continue to follow up and, of course, have updates for you throughout the business show and throughout the News Central, which is coming your way at 12 p.m. now. That's News Central now with all the latest news and information from here on the continent. And we're done with Business Edge for today. Don't forget, again, following us on social media. That's at News Central TV. Download our mobile app, available to you on the App Store and Play Store. Also go to our website, www.newscentral.africa, for the latest from here on the continent and beyond. And that means business, politics, sports, entertainment, and so much more right at your fingertips, whether online, of course, offline, watching us, and also being part of our iReport system. So many ways for you to be part of us telling Africa's story and putting Africa first. I'm Tolulope Adeleru-Balogun. I'll see you again next time. Do have a pleasant day.